Hey everyone, welcome back to another episode of Questions with Matt and Mark. So Matt, I'm going to ask you about something that we're coming up upon here in the next couple of months. It's something called the Santa Claus rally. So typically around this type of year, you get people in our industry talking about the Santa Claus rally. So can you briefly just describe to people what that is?
All right, it's a multitude of factors that cause this, viewers. The first thing is people tend to chase returns into the end of the year. They tend to buy the winners into the end of the year. In addition, you have the seasonality effect, the holiday spending. People are buying stocks and companies that tend to do well around the holidays. Mm-hmm. In addition, you have companies making pension contributions near year end. That money is going in the market. And the Santa Claus rally tends to spill over to January and February. At the beginning of the year, people who are highly comped begin contributing to their 401ks again. Just the seasonality effect is very strong this time of year, and it runs generally from November to about the beginning of February.
Yeah, so base thing that people need to know is typically this period of the year is strong for the stock market.
Going back in history, viewers, multiple decades, by far, this is one of the strongest periods of the year.
Right, and that's not without saying that we can't get a correction in one of these months.
Absolutely.
If we go back to, I think it was the winter of 2018, I believe, there was a massive sell-off.
Yeah, we had a bad fourth quarter in 18.
Right, so anything can happen, but if you're going by the numbers, typically it tends to be a healthy couple of months.
If you're staying by the stats, that's correct.
Right.
All right, so we had a viewer question this week, and I'm going to read this one. So it's almost time for the IRMAA figure for 2022 to be released.
Okay.
And a viewer wanted to know feedback on that, and has it ever decreased, Mark?
Yeah, so for starters, the IRMAA is the income-related monthly adjustment amount for Medicare premiums. So once you turn 65, you're eligible to get on Medicare. And how much you pay in premiums every month is determined by your income.
Correct.
And for people that don't know, Medicare automatically goes off of your 2 years ago income. It's
Correct.
not just what you made in the previous year.
Correct.
So it's 2 years ago. So for example, if you got on Medicare and 2 years ago, your income is significantly higher than it is now, you can actually go and appeal to the IRS and Medicare and be like, hey, my income is significantly less
I
now.
retired, my income is less.
My premium needs to be lowered. So if you fall in that camp, definitely make an appeal. You can look up how to do that just on a simple Google search. But the question from Dennis, I personally have not seen IRMA rates come down.
I haven't either.
Actually, when they go up, it's a benefit for people because the income thresholds that you have to meet are higher. So you're getting a bump up this year because of the obvious inflation that we've seen. But when those brackets go up, it's actually a benefit for investors because you have to make more money for your premiums to get adjusted upward.
That's right.
So I personally, Dennis, I could be wrong when I say this, I have not seen them come down. And for 2022, they will be going up as well.
Other comment, Dennis, is we heard that Part B is going up 15% for everybody next year. So that's a substantial raise everyone will have to budget for.
Yeah, exactly. And then the last thing I'll throw out there is just make sure you're paying attention to it. If you are on Medicare and you're still working full time, get with your advisor and check to see if you're above the threshold of having your premiums increase. So that's one thing around this time of the year that I always like to tell clients to do.
Perfect. All right, viewers, come back next week. Have another episode of Questions with Matt and Mark. Mark and I will see you then.